both indices down. Apparently liquidity a real challenge ahead of elections next year. My first question is, are we going to have those elections next year?
That would be a tricky question to answer. But pronouncement from one of the political parties is elections are going to on next year, but it all hinges on the implementation of the GPA, which still some outstanding issues. So we wait to see guidance on elections next year.
Well, in the meantime, then, that political risk has created a bit of an aversion to the market and hence the liquidity problems. But there are other things that are working in Zimbabwe's favor. I mean, the Finance Ministry has released its 2011 strategic budget paper, looking at 2012, for instance, and also the years to follow, 2013 and 14. They anticipate growth to be buoyant, rising from 7.8 to 9%, still driven by mining and agriculture. Now, we know that story. What about the performance of other sectors?
The other sectors, they're set to increase their share in the GDP, but their contribution is not as much as compared to agriculture and mining. So going into 2012, 2013, the government anticipates that agriculture and mining will be the main drivers of the economy. But tourism, manufacturing, transport, communication are set to increase their contribution to GDP.
Inflation also fairly benign in Zimbabwe. The average rate expected to be between 3.7% and 5%. Now, I find this curious because every other African country is feeling the pressure of imported inflation, particularly on food and energy costs. How does Zimbabwe expect to tame inflation and to keep it at these fairly modest figures?
Zimbabwe is dollarized now, and most of our inflation is imported from South Africa. But in the recent times, we have seen the rand falling against the major currencies, and we expect that to have a positive effect on our economy, since we mainly use the dollar, and we won't feel that impact as much.
All right, balance of payments position for the government?
The balance of payment is set to improve, but however, it is remaining in a precarious position. 2011, the budget, the BOP deficit is projected to be 790 million, and the government expects that this deficit will reduce to 438 million in 2012.
All right, there are some tax reforms that we've started to see being implemented. How's that going to help improve on the revenue position?
The ZIMRA is tightening its collection methods, and in 2012, the government anticipates that the total revenue collected will be 3.4 billion, which is 34% of GDP. So we are seeing an improvement in the gross national income to GDP from 30% to 34%. To note is the African average of this ratio is 32.9%.
Now, the government expects to present a balanced budget going forward, managing their expenditure. How feasible is this? What is their strategy for managing expenditure, particularly when there's a big reconstructive drive for Zimbabwe?
We must note that from 2009, when the dollarization took effect, the government has been trying to maintain a balanced budget. So they are spending what they have. I think the deficit will be, we have seen it incurring a deficit, and it has been financed by donors and other revenues. So we expect that trend to continue, and we expect that in the coming year, the 3.4 million will be the budget.
What sort of areas are we going to see the government spending on? Because there's a huge cry for more investment in human development issues, education, healthcare, sorting out public sector wages.
Yeah, the government has already put it that they are going to spend 2 billion on the employment costs, which is about 60% of the revenue. We also expect that the government will invest on the infrastructure development in the areas of energy, power generation, transport and distribution, water and sanitation, and ICT development.
Okay, Tinashe, final question. The government's got its program of action. What are they doing to entice investors? Because even in the midst of this fairly positive budget that they're planning to have for 2012, the point is investors are jittery. Indigenization is a problem. It doesn't seem like the government's doing enough to create an enabling investment environment. So what are they doing on the investment side, in policy, on the trade side, on the labor law side?
On the labor laws, they are trying to, they are going with labor law reforms, trying to balance the overhead costs, which are really choking some of the companies. We're also going to see financial sector reforms, which will start with the automation of the ZSE and the establishment of a central securities depository. Though this has been on the cards for a number of years, I think this year we're going to see it being put as part of the budget. The multi-currency regime is going to continue, and they are going to capacitate the Zimstats so that they can avail quality and timely statistics about the nation. We're also seeing a lot of roadshows and conferences being penciled in to promote investor education. So those efforts will do well to improve investor confidence.